to the 1 Million Cups community, Mike Vernon from Flood Insurance Hampton Roads. Please welcome him.
Ray, thanks for the invite. I'm not the typical technology company that visits 1 Million Cups. I like to refer to this concept as mature simplicity. I heard that phrase many years ago, and to me it means you go around the world and end up across the street. And Flood Insurance Hampton Roads has been a culmination of now what is a 4-year journey that I hope continues and grows, because I've become extremely passionate about it. The first thing I want to talk about is, can a business named Flood Insurance Hampton Roads survive? Well, I think it can. These are some of the facts. Almost 70,000 properties in Hampton Roads are required by law to have flood insurance. That's more than any other region in the United States. That's billions of dollars of annual premium. The average premium is almost $900 per year. That's one of the highest averages in the entire country. Flood insurance, like I said, is mandated by law if you live in a required flood zone and if you have a federally backed mortgage. You have no choice. There is one primary provider of flood insurance. That's the National Flood Insurance Program. And they dictate what the premiums are, and there's no competitive marketplace for you to challenge those premiums. You get paid, you pay what they tell you to pay. And those premiums are going up drastically. It was only about 2 years ago the average premium here was $700. So they expect that to continue to grow in premium, and there's a lot of reasons why. And in 6 minutes we can't cover it, but hopefully in the questions and answers. So without a current competition alternative, the people are locked in. So increasing flood insurance premiums are affecting the real estate transactions, and this is a huge, huge issue. It's affecting value, it's affecting sellability, etc. Large premiums affect marketability and value because of legitimate objections. When a buyer comes along and they see a $3,000 premium on a $300,000 house, it opens Pandora's box for objections. You know, how many floods have you had? Do you have crawl space damage? If the premiums are already this high, how much higher are they going to go? Well, why don't I just spend that $3,000 and go buy more house? So people are trapped in this. However, there's a term called flood mitigation. And flood mitigation is the act of making these homes more flood resistant. And if you do that by FEMA code, you can lower the premiums by as much as 80 to 90%. So part of my mission in all of this is to help people learn how to mitigate their properties. Flood policies can ruin deals due to DTI. DTI means debt to income. It's a very important ratio in the mortgage banking industry. So if you have too much debt in relation to your income, you won't qualify for a mortgage. Well, a lot of people qualify just fine until they find out at the last minute that they have to buy a flood insurance policy, which counts against their debt to income ratio. However, if we're able to mitigate those premiums, then maybe we can get them in and that transaction can continue. Foreclosures are occurring due to increasing flood insurance. Older homes that were built before the flood maps were drawn are going up faster in premium than any other class of property. A lot of these older homes are lived in by older people that are living on fixed income. And when their flood insurance have increased over the last few years from $300 to $2,000, they can't afford to stay there. And yet they can't sell their house because nobody wants to buy the house with the large flood insurance premium. So that's another market that comes across my desk all the time. People are upside down on their mortgage and have a large flood insurance policy. And they can't do anything about it, so they get frustrated, they walk away from it and leave it with the banks. So we're talking to the banks about how can you help these people with low interest loans for mitigation so that you don't have to absorb a house into your portfolio that you don't want. All of these are opportunities. So why is this happening? Well, the National Flood Insurance Program is $24 billion in the hole. And they go farther and farther in the hole with every major storm. Katrina, Sandy, on and on. Fortunately, they have a line of credit with Congress in which they can go back every single time there's a big storm and draw money out of the budget. But who actually pays that? We do. So what are they doing about it? They're raising premiums. That's very, very important because that's really what's affecting the real estate market and other aspects of our community. If houses start dropping in value, throughout neighborhoods because of flood insurance premiums, what is that eventually going to do to our tax base? What's that eventually going to do to our schools and roads when we're not collecting as much money from our community because flood insurance is driving down the price of houses? The big thing, though, is FEMA wants to lower their exposure. And what I mean by that is they want to write smaller checks for future storms. And whenever the government wants any individual to do something that's good for the whole, they offer a financial incentive. Plan for retirement, get a tax deferral. Well, in this situation, they're saying if you make your property more resistant to flooding, it lowers their exposure, which justifies lowering the premium. And they want you to do FEMA-approved mitigation to make that happen. So these are some real-life examples, and I could put dozens of these up here. You see on the left is before cost of insurance, then there's the mitigation project, and then the after cost of insurance. $3,900, $15,000 project, $3,200 premium at the end. All these houses were on the market, none of them were selling. They instituted mitigation, the houses went back on the market, and not only did they sell in a normal time frame, they sold at full market value. Because they went to being safe, and they went to being one of the most competitive in that community because their flood insurance premiums were lower than the neighbors. So, how and why can I do this? Well, it's like a journey. If I go into a real estate office, almost any real estate office in Hampton Roads, they'll look at me and go, "You're the flood guy." That's because since 2012, let's see, I missed the flood, there it is. Since 2012, I've been in the flood mitigation world. I'm an expert on the National Flood Insurance Program's code, and I've done some things along the way that has helped me create a market position and a brand. I joined the Hampton Roads Real Estate Association in 2013, knowing that real estate agents and mortgage bankers would be able to refer me a lot of business. I became one of the founding members of the Flood Action Committee. I've either presented to or taught CE classes to over 2,000 real estate agents since 2012. And that's why when I walk in an office, they look at me and go, "You're the flood guy." I get 8 to 10 phone calls a week from people I've presented to at some point in time during the last 4 years. I've presented to over 30 civic leagues, and I've had some pretty cool speaking engagements that have brought me some fair amount of press. I've spoken at the Virginia Coastal Policy Clinic at William & Mary Law School, which is the symposium for the state on sea level rise. I've been quoted in a bunch of periodicals that I can show people that bring credibility. So I'm well positioned, and I have a good brand for this company to get off to a very quick start. And how do I want to make money? I want to do the following things. There's what's called an elevation certificate that's used to price flood insurance. It's done by survey firms. I resell those. I then do mitigation analysis and consulting for a fee. Once I've done this and built credibility with people, it's very easy to get them to transfer their flood insurance policies to me. And once I've got their flood insurance policy, I have someone call them and try to convert the home and auto and umbrella and all the other insurances that go with it. So in a nutshell, it's a very simple game plan. There's not a lot of moving parts. It's a tried and true proven industry, and flood insurance is not going away. The problem's only going to get worse as we move forward. So thank you very much for your time.
All right, so we always finish these with a question for our presenter. Other than those of us who may have flood problems or connections in the banking business, what can this community do to help flood insurance Hampton Roads?
Just spread the word that there's a resource out there that is very passionate about helping people. This is a tremendously emotional situation for people. I've seen people that wanted to hit me with a baseball bat when I gave them the numbers or the situation. I've had people cry on my shoulder. I've seen people lose their house. When you drive through Norfolk and you look over and you see an abandoned house with a bank sign in it and there's green around the bottom of the house, you know it was a sad story. And I want to make as many of those sad stories go away as possible. You have to let people know there's a resource. And that's what I want to be. That's what floats my boat. That's why I refuse to get out of this industry and find more and more ways to stay in it.
It's not all doom and gloom either, so.
No, there's opportunity.
Let's give Mike another round.